The Indian market defied global markets as it continues to gain ground for the third trading session this week. Broader market outperformed while small and mid caps really shone through. Real estate, financial stocks charge ahead while the pressure on IT keeps on.
Shares of Hindustan Zinc and Madani surge in trade. This after the DGTR recommends imposition of 12.5% safeguard duty on imports of flat steel products for 200 days.
Setback for Bharti and Vodafone Idea. The government sources tell CNBC TV18 that the Cabinet Secretariat has informed the Telecom Department that the proposal to waive interest and penalty on outstanding AGR dues is, and I quote, no longer under consideration.
The RBI is set to hold fresh OMO on 25th of March. Just yesterday, the central bank injected 50,000 crore rupees. That was a part of its 1 lakh crore rupees liquidity infusion plan. Bank of Japan leaves interest rates unchanged amid tariff uncertainties. Now eyes set on the outcome of US Fed.
Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we try to sort of comprehensively wrap out everything you need to know as far as the next trading session is concerned. I'm Prashant, with me, my colleague Vinny. Vinny, hi.
Hi Prashant, an interesting day, right? Third day of gain, not a bad week coming in for the Indian markets. And I think that's a happy day, at least for us. Tomorrow is what we're watching out for. Fed is there, we have the weekly expiry. So I think maybe hoping that this green continues on the screen.
I mean, possibly, right? I mean, we've done well. Yesterday, I think somebody called it Super Tuesday. I think today is a good Wednesday. So, and I think, that repair and recovery continues. And a lot of skepticism still. I mean, there are still, you ask around and you'll find people and experienced people who will say that the bear market is not over, that there's another retest of that just under 22,000 level left. It's coming. But no one knows. The answer is no one knows. You can really, after a sharp fall like what we've had, read through what the market is telling you, what the price action is telling you. The price action has been clear that this market wants to sort of at least go higher for now. And that was the message last Friday. It was the message yesterday. And of course, it's the message today as well. So the Nifty doing well, the Bank Nifty doing well in the face of the near 2% decline that we had in the Nasdaq last night. And of course, 2.5% in the mid and small cap indices, even better. By the way, the Nifty is now, yesterday took out the 20-day. Today it took out the 40-day. The Nifty Bank today has taken out an important 61.8% retracement of the last leg of the fall, which started on the 7th of February. So it's looking pretty decent. The big unknown in that sense, right? I mean, it's not as if globally things will look very bad and that should hit us in a big way. But what is going to be very meaningful is exactly 10 days from now, is the 2nd of April. And, if the Trump administration is really serious about pushing through some heavy-duty structural tariffs, I mean, that's a problem. So I think that's broadly the way I would look at it. There is Fed tonight, but likely to be a no event. What can they do? I mean, they'll probably most likely, the message will be, we'll wait and see. And maybe some tinkering on the dot plot, etc. But that's a broader setup that we're working with. 22,900 on the Nifty and a good session once again.
Absolutely. And, some of these sectors, let's talk about that as well. We have real estate. So Nifty Realty was among the top sectoral gainer. Other than that, financials, banks, like Prashant was mentioning as well, was in focus. On the flip side, we had Nifty IT. That was a bit of a miss coming in. So, yes, that's what is something that was subdued in today's trading session. TCS, Infosys, Telecom, all of them were under pressure in today's trading session. Well, on that note, let's get started with the show. And, on the show, we have an exciting lineup for you all coming in. First up, we'll start with Hormuz on the wall to tell us about the top movers and shakers in today's trading session. Then we'll focus on steel stocks, including SAIL, Tata Steel, in trade today on the back of the 12% safeguard duty, while IT stocks took a hit after Citi's note. So stay tuned in for all of that on just a bit. But let's start with the show and go across to Hormuz, who's on the Paul, to tell us about the top movers in today's trading session. Hormaz.
You pick anything and it was green, barring a select few pockets. But it was a good day, particularly for the broader markets in today's trading session. And it was the defense stocks that were leading the charge in today's trade. Beat the likes of Garden Reach, Mazagon Dock, Cochin Shipyard. Garden Reach was up 20% in today's trading session. Mind you, both of these names, Garden Reach and Cochin Shipyard, were the ones that were the most hit also from the top. Bharat Dynamics and HAL too having a good day. If the defense PSUs were on the charge, the railway PSUs could not be left behind. Beat the likes of RITES, BEML, IRCON, all of them ending at or near the highs of the day. RVNL and IRFC too seeing gains of anywhere between 5 to 9%. There's a lot of newsmakers in today's trade. GR Infra after the LOA had a very good day. Double-digit gains for the stock there. NMDC Steel, of course, outperforming the steel peers, the JSW Steels, the Tata Steels, all of them having a good day. IT as well. We'll talk about this in just a bit after the Citi note. Indigo, a potential nifty candidate in the September review is what reports are suggesting. And Vodafone Idea too seeing a bit of a dip and then ending 5% higher at the close. It was a sweet day for sugar stocks as well. Almost every other sugar company from Balrampur to Sri Renuka seeing gains of 5 to 7% on the production figures. And lastly, there were stocks that were on the charge were real estate names, the top sectoral gainer in today's session. Every single constituent ending with gains there. Back to you guys.
All right, Hormaz, thanks very much. So, a long list of gains and lots of volume there as well, which is good to see. Let's bring in Ambareesh, who's with us, and Shrikant Chouhan is with us on the price action. Gentlemen, welcome to the program. Shrikant, brief kind of context to what we've seen. I think, 1,000, 1,200 points in the Nifty from the lows. How much more in this leg?
Afternoon, Prashant. Afternoon, Surbhi and everyone.
This time Vinny is with us. Shrikant, Vinny is with us today.
Oh, sorry. Absolutely, yes. I'm extremely sorry. We can say it's an effect of bullishness in the market. As you said, like Super Tuesday and Good Wednesday. But yes, broadly, I think the market has crossed all its important levels in one go. And since December, if you see, most of the time, whenever the market has like bounced back from the lows, we saw a good amount of selling pressure close to 50 days simple moving average. And today's highest was very close to those levels. While looking at the entire setup of the market, I am of the view that this time the market is heading for 100 days simple moving average, which is around 23,300 levels. So we may see some pause sort of activity around these levels, but broadly, I am of the view that we are heading higher. And in case if there is any correction, again, we should look for adding positions. Also, if we go through with the option statistics, then at 23,000, there is good amount of call writing. And on the dismissal of that, I am expecting a huge short covering, which may take the market towards the levels of 23,300 sort of level. So broadly, in case if there is any correction, we should look for adding positions. And it's a pullback. I'm not saying that this is converting into rally. And it was due because the market was falling relentlessly after the announcement of the budget. So from 23,800, we saw the levels of 21,800. And maybe that's the reason now we are seeing the pullback sort of rally in the market. So we need some more evidence whether the market is forming higher bottom, whether the market is crossing its previous high of 23,800. All these things will decide the next leg of the market. But broadly at this level, in the near term, we are going to see further more activity.
Okay, all right. Let's get on with the first story, and this is with regards to steel now, right? The government is, at least the DGTR, is proposing safeguard duties on steel imports to protect the local industry from dumping. This is yet to be ratified. My colleague Nigel, who tracks the space, sent us this report from his holiday in the hills. Nigel, take it away.
DGTR has recommended that close to around 12% safeguard duty on all imports that are coming in on HRC. This is important, but keep in mind this needs to be notified by the Finance Ministry as well, which most sell-side analysts don't believe it's going to be a bit of a challenge on that front. So for the time being, it's the DGTR that's proposed it. And in fact, we'll be waiting for the Finance Ministry to go ahead and approve it. Few points to note out here. One is the industry, they were rallying for around 20 to around 25% safeguard duty. But the realistic assumption was that you'll get closer around 10 to around 15%. In anticipation of this news, you've seen that steel prices have moved up by around 2,500 rupees per ton, or around 5% in the last 1 month or so. Now, with this 12% safeguard duty, they have some headroom to go ahead and increase prices further. Keep in mind the domestic flat steel prices are already at a premium in comparison to imported steel, though there could be some headroom out there. What's positive though is that this price hike that they've taken, that sticks, and that directly flows down to the EBITDA per ton. As it is, we know that coking coal costs have come down, so it'll be a dual benefit for them. Q3 FY25, in all likelihood, the EBITDA per ton for all these steel majors, they have bottomed out, and things will look up from here on, which is positive. Philip Capital, they have come out with a note and they say in terms of pecking order, SAIL is the one that they believe is the most benefited, followed by JSW Steel and Tata Steel. There'll be a rub-off effect though on the entire value chain. So good news coming in for the steel companies, but keep in mind they've been outperforming and anticipating this piece of news to come in there.
Absolutely, Nigel. Thank you so much for that. Ambareesh, coming to you on this front, today we also managed to speak to Manish Sarda of Sarda Group, and they were also highlighting that seems like the worst is over for all these steel companies, and now better days are ahead from Q4 and onwards. Do you think that this move is also something that will further enhance the growth of these companies, and what is your pecking order coming in here?
No, I think this move will be some sort of a catalyst, possibly for the move ahead as far as the steel industry is concerned. Because from a demand perspective, I see the demand clearly moving up, possibly over the next 2 to 3 quarters, especially with the way the infra is expected to take off again. Because like last year, we did not see a great execution as far as infra is concerned, but this year we're expecting that to happen. So overall, on the steel space, I would be positive, and because of this news, I think we can still see some more upside. So the pecking order would be Tata Steel, SAIL, as well as JSW.
Tata Steel top of the pack there. Okay, IT was the other area, right, which was, there was pressure. Actually, the IT index at one point was down almost 2%, ended about 1% lower, some recovery, but many losers here. I think Citi is highlighting some concerns. Valuations is one. Hormuz has got more. Hormuz.
When times are bad, even a recovery does not look like one because of the way the broader markets and the benchmarks behaved in today's session. But the Nifty IT in general, in technical terms, is in a bear market because it has corrected more than 20% from the highs that it made in December of last year. And since then, even on a year-to-date basis, the index is down 16%. Despite this correction, Citi, in a note today, says that the valuations for the Nifty IT are still on the expensive side. The valuation premium in comparison to the Nifty at 30% is still way above the 10-year historical average, which is at around 12%. So they have highlighted a list of points that can act as potential headwinds for the sector going forward, and which is this global macro uncertainty, the data that has come out from the US that can say that the near term does not look very good for the US market, which is a core market for most of these IT companies, and of course the competition from the GCC and the disruptions within the AI space, they can act as potential headwinds, and as a result of which it is only expecting a 4% revenue growth for its coverage universe, which is the same that it is penciling in for this year in FY25 as well. It also says that improving margins can be difficult for these companies in a highly competitive environment, despite the fact that the rupee has depreciated to record lows, which is generally a positive for these IT companies, as a result of which they now have a neutral recommendation on stocks like Infosys and HCL Tech. They've upgraded emphasis to neutral after the fall in the stock price, but they have a sell recommendation on a lot of these mid-cap IT names, be it Persistent, Coforge, Tata Technologies, and along with the large-cap names like Wipro, Tech Mahindra, and TCS. Overall, a cautious note coming in from Citi.
All right, Hormuz, thanks very much for that. And by the way, it's 15 trading sessions to go for the first IT result for the quarter, that is the fourth quarter. And remember, this is the end of the year, so those who will provide a guidance will do it at the end of this quarter as well. Ambareesh, any thoughts here? You heard Hormuz there, the concerns. I mean, some of this is well advertised, but I mean, stocks, of course, reacting. What would you do?
See, Prashant, as far as IT is concerned, I think order flows from US are extremely important for this sector. And I don't think US has seen this sort of a policy instability since a very, very long time. And now, in fact, we're talking of a slowdown. So clearly, I think the order flows from US will get hit. And I think that's one of the most important reasons why we have seen this sort of a correction in the IT space. I don't see this getting corrected quite soon. So at least for the next 1 or 2 quarters, I think one needs to be a bit cautious as far as the IT space is concerned.
Okay. That's a view coming in from Ambareesh on IT. But let's move on to the next story for today. And in a possible setback for telecom companies, Vodafone Idea and Bharti Airtel sources tell CNBC that an AGR waiver may not be on the cards anymore. Ashmit is here to give us more details on this one. Ashmit?
Well, an important decision being taken today, and this is being confirmed by senior government functionaries. What they're telling us is that, yes, the government had been contemplating granting relief to telecom companies in light of the AGR issue. The relief that had been contemplated was a 50% waiver as far as the interest component is concerned, and a 100% waiver of the penalty and the interest on penalty component. That was the relief that had been considered. That relief, importantly, was floated before the cabinet. A cabinet note had been floated. What we're picking up from sources is that there has been a withdrawal of that cabinet note. Importantly, this issue is no longer under consideration, at least with respect to the waiver that had been contemplated with respect to the AGR issue. Now, bear in mind this decision to withdraw from the cabinet, in terms of the cabinet not cabinet saying that this issue is no longer under consideration, effectively comes after repeated decisions by the Apex Court to refusal by the Apex Court to tweak the AGR demand. On multiple occasions, the telecom companies had made representations before the Apex Court that, look, there could be computational errors, there could be arithmetic errors. It is only after that that the DOT had been contemplating a relief in terms of this waiver, this partial waiver, 50% for the interest, 100% on penalty. That, importantly, decision has been arrived at. Senior government functionaries confirming that, at least as of right now, there is no further consideration of the waiver as contemplated by the DOT. Back to you.
Right. Ashmi, thank you very much for that. That's an important story. Nothing was built in terms of estimates, in terms of the relief for these telecom companies, as telecom analysts earlier told us. But there was hope at the margin that maybe the government will step in at some point and help with this burden. Shrikant, I don't know if you have any thoughts on any of these telecom stocks. If you do, you can share them. But I want to also ask you, what are your trades? What are the fresh trades you'd like to recommend that you would be confident in putting on here?
Yeah, Prashant. I think, see, like all these telecom companies, in that specifically, if we consider Bharti, then it is consolidating, and it has been consolidating since last almost 2 months. Currently, it is showing some weakness. It is finding difficulties to sustain at higher levels. So we are expecting this stock to spend time between the range of maybe 1650, 1660 on the higher side and 1575, 1580 on the downside. But apart from that, I think this particular sector is showing some sideways sort of activity. But yes, if we really go for taking any specific trade in this market, then again, we need to focus on private banks, because there the momentum is very high. We also like pharma companies. There also we feel stocks like Aurobindo Pharma, Lupin Laboratories, Divi's Lab should do well in the near term. And from the NBFC space, we saw some correction today. But again, we are expecting activity in stocks like Bajaj Finance as well as Shriram Finance. So there are like number of stocks which are doing really well, and they are trading above their important resistance level. So furthermore, activity is more likely from all these companies.
Okay, Shrikant, thank you so much for that. So surely some pharma names and NBFC names, but let's switch gear and talk about aviation today. We had Interglobe Aviation that was in focus. It did manage to touch a 52-week high today, then came off those levels. But the main reason for that, there was a physical analyst meet today in Delhi, which the company held, where the CEO gave some positive guidance for Q4. They said Q4 FY25, they're expecting a capacity growth of around 20%. Other than that, the yields are expected to be much better than their guidance, and overall, FY26 is expected to be on similar lines with FY25, though they have a lot of aircrafts that are coming in as well. The A321 XLR, which is mainly going to be used for longer destinations, long-haul destinations. So more international destinations could be added from the company going forward. And overall, they've given a guidance for FY30 as well, 600 aircrafts. And FY26 could see a faster pace of growth on that front. Other than that, the other piece of news was that we had a note that came in from Nuvama Alternate Research, where they are saying they believe that there's a high chance of inclusion of Indigo into the Nifty 50 in the September 2025 review, and they would be replacing Hero Moto in the Nifty 50. They believe the stock could actually do well and slowly head towards the 5,600 to 5,700 mark, and that is why we're seeing a bit of an up move in today's trading session for the stock, Prashant.
Absolutely, and flying high. Stocks, of course, come off a little bit with the rest of the market, but nothing close to what some of the other stocks and sectors have done. So just under 5,000 rupees on that one. Shrikant and Ambareesh, thanks very much, both of you, for joining us with your thoughts, your perspective. Time for a quick commercial break here. We'll get you some more corporate voices that we had through the course of the day, and of course, we'll wrap up with events to watch tomorrow. Stay tuned. All right, welcome back. You're with us here on Markets Forward as we wrap up things important as we come back tomorrow. Well, today we had some of the more interesting managements which we want to highlight for you. Muthoot Finance stock was up about 4%. The AUM for Muthoot Finance has now crossed the 1 lakh crore mark. We spoke with them around this. They're guiding for net interest margins for FY26 to be between 10 to 12%. The company has already achieved 40% AUM growth this financial year. At the end of the last quarter, there's a third quarter, that number was about 38%. They expect AUM growth of about 15% going forward, which has been their standard guidance, but they also added that it will be better than that 15% guidance.
Also, not only that, with the arrival of summers, AC stocks were fired up. But however, the availability of compressors for air conditioners is a growing concern among these companies. The management of Blue Star says that the availability of compressors for air conditioners remains a touch and go situation for the company. The non-tariff barriers on the imports is hurting supplies of compressors. The management believes India may take 2 to 3 years to become self-sufficient in compressor manufacturing. Next up, also we spoke with the online gaming platform Nazara Tech, and who saw a top-line growth of 70% YOY in Q3, and the company expects to grow strongly in FY26 as well.
Okay, well, interesting conversations as always. Before we wrap, let's get you some of the key events to watch out for. The first, of course, is tonight, almost midnight. That's the Fed, but Mangalam has got more. Mangalam.
You said it, the first thing that we'll be watching out for will be the outcome of the Fed meeting, to which our markets will be reacting tomorrow. So that's one thing that we'll be watching out for. And additionally to that, remember, it's a Thursday tomorrow as well, which tells you that it is Nifty weekly options expiry. It's been a good series for the bulls so far. So can that momentum continue tomorrow or not? Can we cross that 23,000 mark or not is something that we'll be watching out for as well. And that depends on what happens in the Fed tonight. More importantly, individual stocks will be in focus. We've been speaking about Manappuram Finance, the possibility of Bain entering in the company as well as one of the investors. So the board meet to consider fundraising via issuance of securities. We'll get clarity on that. There is another board meeting tomorrow as well of another financial institution, Indian Bank, the board meeting to consider fundraising as well. Then we'll keep an eye out on an IPO. After a very long time, we have an IPO that opens tomorrow. Grand Continent Hotels, price band at 107 to 113. And then we have a bunch of macro data to contend with too. Coming in from China, we do have, the Chinese loan prime rate data that will come by. There will also be the retaliatory tariffs on some Canadian agricultural imports, which will go into effect. And we'll keep an eye out on European data too. In terms of the Bank of England interest rate decision, the ECB economic survey or bulletin that comes by, and a bunch of other data points that we'll be watching out for, none as important as the US Fed meet outcome today.
All right, Mangalam, thank you very much for that. That's a comprehensive look at things to watch out for as we return tomorrow. With that, it's a wrap on this edition of Markets Forward. From Winnie, me, everyone who put this show together, thank you for watching. More coming up in just a bit.